good.
Okay, wonderful. We're 4 minutes past 8. I'm going to start. Can everyone see the screen? Thumbs up.
Yes, we can see.
Excellent.
Yeah, can see.
Excellent. Now, you can't be cross with me around the funding that we have available. We've worked really, really hard to get it. And we worked hard to get it because the banks don't fund businesses in South Africa. They'll give you debt, and debt is very, very expensive, and debt is very useful if you're going to buy an asset, let's say a property or a piece of plant or equipment or a vehicle, then debt is useful. But it's only useful if the economy is stable. Because if the economy is stable, you can forecast your revenue, you can see that you can afford the debt, and that's fine, good and well. But I'm going to talk to you about next level growth and what next level growth means. Because Piwo, that's why we are here. That's why we are working together. And I'm going to talk to you about the two types of growth, and we fund next level growth. So we went into the market, and I started to sell a story that from an Aurik point of view, we work with, and I genuinely believe this, we work with the most dynamic people in the country. If you think about an English breakfast, you've got bacon and eggs, right? So what's the difference between the chicken and the pig when it comes to the bacon and the eggs? The chicken participates. The pig, unfortunately, gives it everything it's got. And I always look at society as made up of bacon and eggs. Our politicians are the eggs. They participate and they feed off us. Our big corporates, and I hope I don't offend anybody, our big corporates are eggs. And they feed off our economy. The kids are eggs. All of them are eggs. They're all feeding off us. People in academia, in religious institutions, they're feeding off us. Because last time I looked, the only people who commit everything they've got, and risk almost everything that they have to make a difference are private business owners like ourselves. So my argument to the funders was that I invest through this in the most high potential people in our society. Because there's not one person on the screen that cannot afford to be successful. If your business doesn't work, if you don't get it to where you want to get it to, you lose a lot more than just your income. You lose your purpose, you lose your meaning, you lose almost everything. You lose your dream. You lose your economy, your family's economy. We have no choice but to succeed. And what happened is a whole bunch of people believed in that vision, and they put money into what was and is a Section 12J fund. And a Section 12J fund is a fund that gives them tax benefits and a tax break to invest in people like ourselves. But the promise I had to make to them was that we would invest in a very particular kind of opportunity. So we wouldn't invest in helping businesses turn around. And we wouldn't invest in businesses that are growing just regularly. And we would invest in private businesses, amounts of between 1 and 7 million rands, and it would all be for next level growth. So that's what my conversation with you today is going to be about. I have about 6 or 7 slides only. I'd like to get through them, and then I'm very, very happy to open the forum. Let's talk about the opportunity. Let's talk about funding. Let's share with each other where we're from, what we do. Please go onto the chat, introduce yourself. Say, hi, I'm Richard, and I'm from a future galaxy. Because Richard Majewski works with future galaxy technologies, trust me. Put your LinkedIn profile down, connect with each other. The big benefit we all have over here is that we're aligned. We all have one thing in common in all our differences. And the thing we have in common is that we're all here to build an asset of value. And that gives us a certain language and a certain way of understanding and looking at business. And in that, if you see an opportunity, if you see an opportunity with Carl and you've connected on LinkedIn to each other and you've seen what Carl does and you can see the opportunity, connect and make something happen. Because in a very low growth economy, we have to find our growth through making deals and making things happen. Wonderful. Okay, I'm going to start and I'm going to talk just very quickly about all the things that we've seen over the last 25 years impede, get in the way of growth and value. Growth obviously is increasing the size of your business, both in revenues and profit. And value is one of the hardest things to talk about because it's very often invisible. You know, I've had a number of discussions over the last year and a half around what is wealth and how do you create wealth in a business? Because wealth and growth are two different things. And I'm going to talk a little bit around wealth and why it matters to all of us. You know, from an Aurik perspective, that we fundamentally believe that your business should be your greatest wealth generating asset. And yet 94.6% of businesses started in the United States, which is a very, very vibrant market that earn good income for the business owners, fail to sell. In South Africa, the stats are worse. In Australia, the stats are worse. So we're all good at building businesses to generate income, but we're not necessarily good at building businesses to generate wealth for ourselves. But we'll talk about that as we go on. We've noticed there are three impediments in three areas of business. In leadership, you know those quiet moments when you're on your own or you're sitting with your business partner and you're wondering how to actually figure out a problem that is seldom spoken about, because unless you've built a business and unless you have traveled the road of building a business, that journey of loneliness is only obvious to you at that stage. The three that we've noticed is we constantly, as leaders in our own business, have to figure out how to respond to a changing environment. And the environment changes because of technology, it changes because of the economy, it changes because of competitive behavior, it changes because the market's changing. In South Africa, it changes so much because of socio-political issues. From one day, the rand is this, the next day, the rand is that. From one day, we have electricity, the next day, we don't. And we just seem to be fighting against a completely unempathetic government that does bad deals around energy, that has no ability to release the economy and let people like ourselves run hard and run free to grow our businesses. If I look at the whole issue of electricity generation, it is just so frustrating that they will not release and open up and deregulate that economy. The digital terrestrial network has been in negotiation now for 13 years and we still just cannot get it settled. It's very frustrating. And yet within that environment, we are all expected to know what we are doing and to know where we are going and to know where we're making investments. And our teams are looking at us saying, what do you want me to do? What are we doing this week? What are we doing next month? What are we doing this year? And Bevis, it's worse when you've been in the game for a while. Because you've survived for 10, 15, 20, 30, 40 years, Richard, people expect you to know. And in the quiet moments, we ourselves are constantly wondering. Responding to a changing, noisy environment. Within that, what happened last year with COVID, where all of us almost faced the loss of our businesses, we were pulled back into the engine room. We were pulled back into day-to-day activities. COVID was an attack globally on businesses. And if you look at how you fight a battle, you don't fight a battle from a hill, sending your troops into war. You get on your horse, you get into the front of that battle, and you lead from the front. And a lot of us had to lead from the front. We had to have tough conversations with suppliers and customers and staff. And we had to lead those. And the big problem with that, of course, is if we spend all our time doing, how much time is there left for leading? And next level growth is about leading. I share often the analogy of the ship. We're all familiar with the ship analogy, right? There are two places for us to be, either in the engine room, making sure that the propellers are turning to give us momentum, or to be on the bridge, making sure that we are directing the ship that's propelled forward to its destination. And we all need to be on the bridge as much as possible. Last year, pulled us all into the engine room. And then finally, the opportunity, the manner, the means, the way of delegating activities. I don't know how you guys find it, but one of the biggest complaints I get often from business owners is in the quiet moments when no one's listening. They turn around and say to me, Cordelia, if you want something done properly, do it yourself. And yet, it's not the fault of our teams. It's the way that we delegate and the way that we succeed responsibility and pass the baton. And there are massive opportunities for us to get this right. They're the three biggest issues in leadership that we see. When it comes to operations, without a doubt, how do you find, win, and hold new customers? The world of digital marketing is failing everybody. If you think about it today, there are three platforms that you've got in the digital world to reach new customers. You've got the social platforms, which are largely dominated by Zuckerberg. He's got Facebook, he's got Instagram, he's got WhatsApp. They're a listed entity. And this story, this idea that you can build your community and then speak to them, we all now know is a lot of nonsense. Build your community, but pay to speak to them. So pay to build them and pay to speak to them. It's become really challenging. LinkedIn is exceedingly expensive to advertise and reach new opportunities through. And Google search is a constant mystery for many of us, including the professionals who play in that industry, because those algorithms constantly change. Finding, winning, and holding customers is a real challenge. And we've got to figure out different ways of doing it, because if we can crack the code to that, that's where we get our revenue growth. Once we get revenue growth, how do we grow without chaos? How many people here on the screen have gotten a deal, and in order then to deliver the promise that you've made on that deal, you've had to go back into the engine room and work with your service delivery team? Okay, all been there, putting out these mini fires. It's really frustrating. And what that does is it makes you lose confidence in your ability to sell the next deal. And if you get it right, bumper, what it does is it erodes the profitability that that deal should have delivered for you. And then finally, one of the most interesting challenges is how do you find the right people to do the right thing at the right time, every time? Increasingly, we're living in a world where more and more people are skilled. In fact, never before has our species been as educated and skilled as it is today, globally. And yet, getting the right team on board and getting them to work as one remains a huge challenge. I think it's because of how we're taught to do it. It doesn't work. And there's a different approach that we share with you as we work with you. About the future, all of us are working in the here and now. All of us are very, very focused on growing our businesses, on generating income. We spend 10, 20, 30, 40 years building our businesses. But here's the thing. At some point in time, all of our businesses face only one of two destinations: a successful sale and exit, or closure. There's no middle road. There's no middle road. Jasper, it doesn't matter how much you love what you do, how much you believe in what you do, how excited you are about what you do. Ultimately, you're either going to pass the business on to your friends, family, your management team through a succession. You're going to sell it to a corporate or a private buyer, or you're going to close it. And we need to figure out how to make sure that we all end our business careers through a very successful capital transfer, in other words, a successful exit, because that's where the wealth of an entrepreneur is created. It's not created in the income. Our income is generated through a salary, through dividends, through bonuses, through some expenses you can pass through the business. But the real wealth moment that we face is through the successful exit of our business and lasts into a generation or two. That's how you lift the game for the entire family. So growth, we're going to talk about growth in both revenue and profit. And that's the main subject of today with regard to the funding. We speak about a job versus an asset. Kun, if I look at your business and I knock on your door one day to buy your business, and I realize that you are the single most important person in your business, Munir, you've created a job for yourself. That is not a business, and it's not transferable, it's not sellable. The second thing is that a funder is terrified of that. And they're terrified of that because if I fund your business and I fund your growth, and tomorrow you get hit by a bus, that funder has lost everything. And funders look at businesses as assets. And then finally, we'll talk about wealth and scalability. 9 impediments, all of them solvable. And we're working with you to get them all resolved. So how do we remove them? Let's just talk very quickly about what we should be doing. If you think about an investment that you would make. So Roscoe, you're sitting with $100. You want to invest the $100. You go to the stock exchange, right? And you find a share trading for $100. You buy the share. You decide you're going to hold on to the share for 5 years. What are you hoping for? You're hoping for 2 things. The first thing you hope is that you will enjoy income growth. In other words, for year 1, 2, 3, 4, 5, you will earn a dividend of $20 a year. That's your income growth. In our businesses, that's our salaries. It's a bonus you might pay yourself. It's your dividends. The next thing, 5 years down the line, you sell that share and you find a buyer who's prepared to buy it for $200. You sell it for the $200, it costs you $100. That $100 is your capital gain. So you've got 2 forms of growth. You've got your income growth and you've got your capital growth. The third thing that makes it all happen is that you're able to buy and sell it. That when you make it available to the market, there's a buyer. And the buyer will buy it for its fair value. And its fair value is higher than its cost. 3 features of an asset: capital growth, income growth, tradability, which means independent of us. The way we resolve it is by working with you to build an asset of value. And that means it's a business with 5 features. You're positioned to compete in an overcrowded, noisy market. Folks, the way that we do it, and what we have seen consistently win in the last 7, 8 years, are businesses that don't talk about their products, that don't talk about their services, that don't rely on an MBA marketing approach. You know the MBA marketing approach? Currently, worldwide, MBAs teach marketing like this. They turn on and they say, you need to segment your market, right? So every single market can be broken up into segments. And the segments are where you organize the market with people or businesses that are similar. Because they say birds of a feather flock together. So say, for example, you're going to be marketing into the mining industry. When I sit with business owners in the mining industry and I say, who are you marketing to generate leads? Who are you selling your services and products to? They say, no, we specialize in the mining industry. I say, okay. Everyone in the mining industry? Yeah, well, the mining industry is a big industry in South Africa. But here's the thing. There's a big difference between a multinational miner and a local miner. There's a bigger difference between shallow cast mining and deep level mining. There's a big difference between an established mine and a junior mine. There is a massive difference between mines in the Northern Cape and mines in Mpumalanga from a cultural point of view around how those mining rights are awarded and secured. So all of a sudden, the segment that we are taught to market into from an MBA becomes this noisy, overcrowded, unfathomable market. If we talk about positioning our businesses to solve a very well-defined problem for a well-defined group of people, by giving them a good experience on how they learn about us, how we engage with them, and how we then deliver our service or product to them. It's where we look at specific, detailed buying behavior. That's what sets us apart. Because if you think about yourselves, and I'm sure some of you have from time to time listened to radio, you listen on radio, and the radio you listen to is the radio station that makes you feel they hear you and understand you. When you hear people talking on radio and you have no relationship with what they say, you mostly switch off and move on. Our customers and clients are no different, to the extent that when we talk to them, they think and believe and feel we understand them, we get them. It means that they have an ear for us and they will begin to trust us. In the way that we engage with them, they feel understood, means that it deepens their trust. In the way that we then deliver our promise to them, they then believe in us and support us through word of mouth promotion and coming back again and again. That's what positioning is all about. And if we get that right, the idea is your product or service solves the problem, but the experience we create for them is solved through our commercial functions. And all of us have got 5 functions: marketing to generate leads, new customers; sales to convert them into clients; operations to fulfill the service and deliver the product; administration to manage the process; and money to ensure that we make everything work. So if you think about how to create an experience for me, Karen, when I come and buy something from you, without you managing me and being involved in the relationship, the way that you build your commercial functions, the systems you build behind them, is what creates that experience for me. The work we are doing together, 80% focuses on those elements. Because if we can get those systems built System, right? Activity in a sequence that can be measured, taught, given to an individual in your organization to operate, and then remunerated. If we can get that right, it means we get good team members on board. It means that we build a team of the right people doing the right thing at the right time. Those three elements, positioning, a system of delivery, and team members, give you two outcomes in your business. What are they? Who knows them? Let me open my chat. I can see the chat is very busy. What are the two things? If we get those first three steps right, and we get it working well, what does it give you? Two outcomes. Your business is well positioned. All the commercial systems are optimized and integrated and working as one, and your team members are driving those systems. An asset of value, you're halfway there. We're halfway there. It gives you two outcomes. The first is organic growth. So, Pussy, what's organic growth? Organic growth, whatever industry you're in, you must look and see what the growth rates of your industry are. So let's say your growth rates are 5%. Then what you do is you add inflation. And inflation is running at about 4%. Organic growth is where your business runs and grows at 9% year on year on year without your involvement. That's organic growth. It's nice, it's steady, it's boring, it's comfortable, and it keeps the wolves away from the door. The second thing it gives you, the most valuable thing it gives you, is time. Time where you're not in the engine room. Time where you're not driving the business. Time where you're driving the business, not being driven by it. Time to look for what we call next level growth. That will lift the growth from 9% to 30, 40, 50% per annum. And that next level growth comes from a number of areas. It might be new products that you get on board. Curate, it might be from acquiring a competitor. Richard, it might be from entering a new market. Bussy, it might be by getting a fresh team on board in a new area. Roscoe, could be from digitizing processes in your business to generate massive efficiencies. That next level growth needs to be led by ourselves, because next level growth carries an enormous amount of wastage and risk to it. And we need to make the calls on it. And that next level growth must be gotten by not interfering with your positioning, not upsetting the system of delivery that's working well, and not creating chaos in your team that knows how to operate that system of delivery. In Sweat Scale Cell, I use the story of Jack the Baker. Jack the Baker won the hotel hospitality business. He made baked products that were delivered to hotels for continental breakfasts every morning, 365 days a year. That was his positioning. He created a system of delivery to achieve that. He got his team to operate that system. And when he phoned me and said he wants to go and play golf, I lost my rag with him and said, no, we've got steady organic growth now. Now we need to find the next level of growth. And Bevis, he wanted to introduce new products to the hotel groups. And all they wanted was what they had. And Christina, he wanted them to create a whole lot of new recipes. And I said, how does that help? Then he wanted to acquire a business to vertically integrate and diversify. And I thought he was mad. And we had a lot, for about 6 months we fought, until eventually he found a new market opportunity. And that new market opportunity had the same problems that the hotel groups had. So in solving their problems through the same experience that they wanted, that he had offered the hotel groups, he entered a new market without disturbing his brand positioning, without upsetting his system of delivery, and without creating chaos in his team. And when that happens, your revenues significantly rise up and your costs remain moderate. And when you separate your revenues from your costs, you see this gap. That is a significant jump in profits. And that's what every investor wants. That's what they want to fund. And then we talk about value. Value is how you build a business that any investor would want to invest in, that any buyer would want to buy, and that any customer you have becomes tied to you. So, the process we followed, we look at the business today. We've asked everyone, where do you want to be 3, 5, 7, 10 years from now? We've gone through a process where we complete a diagnostic procedure, we set goals, and we configure a growth plan to achieve it. In the implementation, there are 2 aspects: systems implementation, which is engine room work, and then goal tracking, which is work on the bridge of the ship. And I'm really hoping and praying that all of you, when you're building out the systems with our teams and facilitators, you're bringing your teams with. And I'll tell you why it's so important. Roscoe, if you're building out a system, right, and the team in your business that's involved in that system, so let's say it's sales, and only you are sitting with our facilitator building the sales system. And once you have built the sales system, you then take it to your team and say, here's the system, implement it. They're going to be really peeved with you. They might see sales differently. They're at the coalface every day. Their voice, their knowledge, their opinion has not been included in the process of building out a sales system. They feel it's being imposed on them. The second thing is now you have to train them. And they're going to take the training on board because the boss has said so. And then you're going to hold them to the measured outcomes of the sales system. Can you feel what an uphill battle that is? Whereas, Karen, if you include them in the build out of the sales systems that our facilitator works with you on, and their voice is heard, their opinions are considered, the insights that they have, being at the coalface every day, are brought into the conversation. And that affects the way that you build your sales system. Activities in a sequence that can be measured. Then they become owners of that system. They become accountable for the measured outcomes. And whilst you have built the system with your team on board, once built, it's owned by them, and they will drive the outputs. In all the system work we do with you, please involve and include your team, because the extent that you do, you will learn things from them that you don't know about your own business. You will make them feel a part of your future. It creates meaning and value beyond a salary in everyday work. So we implement and measure, and then we start to look at getting positioning in place, a system of delivery in place, a team operating so we can focus on next level growth. And when next level growth comes on board, it has to be funded. All of us here should have enough reserves in our business to support a growth of 7, 8, 9, 10, 11, 12, 13% a year. The moment you're going to start lifting your growth to 30, 40% a year, it's no different to saying I'm going to make the athlete run faster and harder. And when you run faster and harder, you need more oxygen. You need to get funding outside of the business's ability to fund and support its organic growth. A new product is built, it's landed in your clients, and there's massive take-up. There's going to be a working capital issue there. You've identified an opportunity to optimize all your systems and start digitizing some of them. There's a funding requirement to bring on board that technology. You're going to acquire a competitor. That's a capital investment you're making. You find a new market. You want to enter into the UK. You've got a good rand cost base. You want pound revenues. How am I going to get into the UK? If your business in South Africa is stable, you need funding to get into that new market. And that's what Aurik Capital can do. We can fund between 1 and 10 million rand. This is a mandate given to us by the investors. It's equity funding, which means in effect, Aurik becomes an investor in your business, a shareholder in your business. So Bumper, I'm buying shares in your business. We're going to value your business today. Your business is worth 10 million rand. You're looking for 1 million rand of additional growth capital. That means I'm buying a 10% stake in your business for 1 million rand. And that 1 million rand is going to be used for next level growth. A debt funder turns around and says, hey, Roscoe, I'll fund your business, but sign personal surety. You must sign your home, your wife, your boyfriend, your girlfriend, your children, your parents, their homes too, and the clothes that you're wearing. Yeah, and also your hairstyle. Sign all of it over to me so that if you don't pay me back, I can have it all. That's debt funding. And the very next month, you have to start paying back. That's why you raise debt in a steady state market. For next level growth, you need equity funding. You need patient funding, where that investor will stick around for 5 years or so. Once you've used the money to get to the next level of growth, and then say, right, I'm out. Buy back my 10% shares. And hopefully, you're going to be buying it back at a premium to what you paid. I gave you the 1 million rand. I want to get a return of 2 million rand 5 years down the line. That's the equity funder. So this is equity funding. The mandate that we've been given by the market is that we can invest it in any growth momentum. In other words, next level growth. If you see an opportunity to buy plant equipment or stock from a competitor that has not kept up with the changes in the market. So you can find a competitor where you can buy their stock for 30 cents in the rand. You can buy their plant and equipment for 20 cents in the rand. If you're looking to invest in people, software, marketing, so it might be that you want to acquire a business, and that business is in a new market. So you're acquiring a business in KZN or a business 30 kilometers away from you, whatever the case might be. In those instances, you're typically buying people. If you want to acquire a piece of technology to improve efficiencies in your business, if you have got a business that's working well, but now you want to invest aggressively in marketing to create new leads and new customers. If you're looking for new markets and customers, all of those are next level growth. All of those are beyond organic growth. And the investment we make, because of the tax law, requires us to remain with you for 5 to 7 years. We can't sell the investment earlier. So we invest for 5 to 7 years. So like every fund, there's some restrictions. I want to talk very quickly about what the business looks like. So if you look at these graphs over here, on the vertical axis, you've got value. Let's call that rands. And at the bottom, you've got time in years. If we get organic growth going consistently, reliably with you, this is what it would look like. Our revenues will grow organically at 9% compounded annually. Our costs will track our revenues, and our profits will grow, depending on what our profitability is. You might be taking 20% to the bottom line, 30% to the bottom line, 12% to the bottom line. It changes and varies from industry to industry. But this is a good, steady state growth. This is where organic growth is achieved. And you're sitting with time to focus on next level growth. Next level growth begins to look like this. Next level growth is where you've taken your organic growth and you've identified the opportunities to lift the growth rate in revenue. Because you've done it right and you have not upset your positioning, you have not broken down your system of delivery, and you've not created chaos in your team, you've managed to maintain a fairly steady cost base. And as the black line and the red line separate, that yawn, that gap, lifts the green line of profitability. Should you apply for funding with Aurik Capital, this is what we are looking, and this is what we have been mandated to fund the potential of. We need to see that this is in place, the organic growth, and a good, clear, well-defined next level opportunity is shaping out, and we can back that at a massive scale. Although we are limited to between 1 and 10 million rands, we are able to work with other funders to make that a significantly higher number. Folks, this is where we all need to be. We all need to get to this space. Right. Investment and return dynamics. We can only invest with clients that we are working with. Why? Because we know each other. We understand each other. We have a relationship with each other. We know that we're aligned. Aurik Capital is a completely separate business to Aurik Accelerator. Aurik Accelerator invests in potential. Aurik Capital invests in risk and return. There are a different set of shareholders in Aurik Capital, and those other shareholders are actuaries and investment analysts. So the argument that we put to the market is that because we live in the world of bacon in an English breakfast, we know who we are working with. We invest with people we know. We invest in growth, where we're working with you to stabilize organic growth and chase the next level growth. And the investors get access to the dashboards. They want to know the summary performance of the business on a monthly basis. And we report to them, we're on track. Verona's on track to hit a 30% compound growth rate. How do they then exit 5, 7 years down the line? There are a number of ways to do this. It can be the sale of the business. So Richard, we've made the investment, we've grown 30% year on year. 5 years down the line, Aurik Capital is under pressure to exit because the investors that funded Aurik Capital need to get their return. And they say, Richard, we want to exit, buy back our shares. And we will provide debt funding to support the buyback of shares. It means that when you buy back the shares, you raise debt, which you pay off in a 3-year period of time, and you own a business that is hopefully 3 times larger than when we invested. But you turn around and say, you know what, I've had a good run of it. I'm 20, 30, 40 years in the game. I also want to exit. And then what we do is we find a corporate buyer. And depending on the size of the business and the growth momentum behind it, we might even look for an IPO, a listing on the Johannesburg Stock Exchange. And as a collective team, we all sell out. And should it come to that, our partners in Aurik Capital are M&A specialists. They've got long histories in corporate finance. They find the buyers and they do the deals because they know how to ramp up the values. Or you might find a private buyer. Joe Average, looking to buy a business. Cheryl likes your business. They can see themselves building that business. And it's an arm's length buy-sell agreement that's put in place. Alternatively, the buyback of shares. A buyback of shares would work as follows, Busi, as I mentioned. The business was worth 10 million. We gave you 1 million. And over 5 years, we built it up to 3 million. 10% of 3 million is 300,000. Sorry, 30 million. It's a 30 million valuation. 10% of 30 million is 3 million. So I said to Vusi, buy back your shares. We will help you raise 3 million rands worth of debt. We've got relationships with ABSA, FNB, Standard Bank, and Nedbank. We'll help you get a good rate there. They provide you the debt funding of 3 million. You buy out Aurik Capital. You pay off the debt in 3 years. And now you own 100% of a 30 million rand asset. So that's how the funding process works. The process itself is after today. If you're looking for growth funding, let us know. Fatima's on the screen. Let your integration facilitator know. And what then happens is we do a provisional engagement. We go through a funding bootcamp. And the funding bootcamp helps you value your business. It puts a valuation down on your business. And it's a fascinating exercise because normally we only think about valuation when we're ready to sell. But remember, if we're behaving as shareholders in our own businesses, we should understand the levers of valuation. So we go through a process where we support you in defining your valuation so that when you apply for the funding and you pitch the business to the Aurik Capital investment team, and you're sitting across from the investment analysts saying, this is my business, this is the valuation we are placing on it, this is our next level growth opportunity. We're all aligned around the valuation. And should we then succeed at that, what happens is they will go through a process to evaluate the investment opportunity. They will make an offer to you and say, right, Karen, we're happy to come on board. We agree with the valuation. The funding you require of 7 million rand. We're happy to provide it to you in 3 tranches, 3 million rand, 2 million rand, and 2 million rand. Should you hit certain milestones over the next 2 years, and we are there like a bear. We will back you the whole way through. And that's the process that we go through. That whole process takes more or less, from saying I'm interested, about 6 weeks, 6 to 8 weeks. And with that, I hope I've communicated sufficiently what we would do with you and how we see it from an Aurik Capital point of view. And I want to end up with just one thought. You know, it's fascinating. When you work in a number of markets, you get such a wonderful perspective of our own market. At the beginning of this year, the UK economy was expected to grow at 5%. And 3 weeks ago, they re-estimated the growth to run at 6.25%. It's the fastest growth rate that they expect in 75 years, because that economy is going to bounce back off a very low base. In the United States, an economy of that size is expected to grow at 7.2% next year. In South Africa, it's so hard to figure out our growth rate. For all the reasons I mentioned earlier. My personal opinion, we have a government that doesn't know what it's doing. They've got 4 economic strategies. And Carl, I want to ask you, in your business, if you had 4 different strategies, besides it creating massive chaos in your own head, what would it do to your business? How would you lead your team and direct your team? It's the only thing. What would it do to you?
No, we will be headless chickens.
Headless chickens. It's the only thing, guys, holding South Africa back. The only thing holding South Africa back is that our government doesn't have a single, unified, simple, clear strategy, economic strategy. Imagine, that's how easy it is to solve all our problems. If we could get the leadership team of government aligned to one single economic strategy that we remain committed to for the next 20 years as a country, we would be enjoying the 6-7% growth rates. But that's not the case. So where will growth come from? What happened last year is that corporates really had to shed a lot of fat. A lot of our corporate clients that I work with are thinner, leaner, and meaner. And growth rates are already starting to come through. If you look at where the market was, the JSE was in March, it hit that low period below 40,000 points. I think we were sitting at about 32,300 odd points, coming off almost 60,000 points. Look where we've already risen to. The mining industry is kicking ass out there. 3 weeks ago, I drove to the Eastern Cape. And all I did was spend my time stressfully, bumper, overtaking 42-wheeler trucks, one after the next, after the next, after the next, after the next, after the next. Manganese coming out of the Northern Cape, going to Kucha. The mining industry is kicking ass. Long haul freight, kicking ass. The fruit industry, booming. It's all coming through in the economy. And we need to get ahead. The second thing is that because all the corporates shed non-core services, the extent to which corporates will be outsourcing to SMEs is going to grow enormously. That's us. We need to capitalize on that. And the final element of where our growth comes from, Jasper, the mere fact that we are working together in your industry, the competitors that you face that are still stuck in a mindset 2 years ago because they did not get an outside perspective, means that you're on the front foot in the economy as it emerges, and they won't be. And we need to eat their lunch. So guys, don't be too concerned about the South African economic growth rate. We're in control of our own growth, and we must capitalize on it. We've had an increasing number of clients turn around and say, hey, listen, we want to stabilize our business in South Africa. We want to hit good, comfortable growth rates, organic growth rates of 10, 15%. The thing I want most, Bevis, is time. And with you, because you're located in the UK, because you're now located in the US, how do we use a rand cost base to get dollar and pound-based revenues? And that's going to become an increasing feature right across the Aurik client base. We were driven there by yourselves saying we want access to hard currency revenues, but we want to live, operate, and build our businesses in South Africa on a rand cost base. So lots of opportunities lie ahead. And with that, I'm going to close out. I've taken up my hour of time with you. I'm very happy to field some questions if you have any.
Thank you very much for the opportunity today, Pablo. Very insightful, as always. And yeah, from a link perspective, we're very excited and enjoying the journey with Aurik. Working very hard to get to that asset of value. Thank you very much.
Absolute pleasure. Absolute pleasure. It's it will happen. We are going to get there.
Thank you very much. It was very, very interesting. And we will be discussing it with our partners, and I'm sure we'll be taking it further. Thank you very much for great information.
Fantastic. I'm so pleased you got value from it, Bevis.
Thanks, Pablo. We thought we were in the engine room, but we found that there's about 4 levels lower. And personally, I'm under the hull of the ship, scrubbing the bottom of the ship, much like you did once upon a time in the Navy. We've gone back. We went on a driving trip this week, and we've got the audible version of Sweat Scale Cell, and we're listening to it now for, I think, the first time since we started with Aurik. We listened to it, I think, 3 times before we first contacted you. And yeah, we're living the dream, which at sometimes maybe feels a bit like a nightmare. You have to come up for air, but yeah, we love our program so far. We're still in the early days, but if anyone comes to Cape Town and wants to rejuvenate their smile or rehabilitate old dental work, we'll treat you like royalty. And before you even come, you can get a free video consultation with myself or one of my associates. In fact, I lie. I've stopped doing those video consults. We've got 2 amazing new consultants. But in fact, just even if you're having trouble with your teeth and you're in a remote area or in Joburg and you just want to reach out to speak to me personally about your dental care and set you in the right direction, we can do a lot by video. So I don't want to keep talking, but we're here to help you. We're also in the drilling business.
Ouch.
If I may quickly, Pavlo, just from my point of view, thank you very much for the opportunity. I'm actually on the road at the moment, sitting in Namibia. That's why you see a lodge roof behind me.
That's beautiful.
On my way to Windhoek to go and see some customers that are from Germany and potential new markets here in Windhoek as a distribution network. So that's where I'm at the moment. And so I sat aside this morning, and it was very insightful. And I tell you, I've listened to you many times on the radio, Cape Talk, and I just can't record your information fast enough. That's always the problem. When you give us advice and talk about business and skill and entrepreneurship. So I'm also new on the team. I'm learning every day. To tell you, I don't even sleep at night. I'm just learning, and it's fantastic. And this journey is so exciting. And I've jumped in boots and all. And as I said, Clifford, I'm under the ship too. I'm in the hull. I'm everywhere. You know, I'm painting, I'm scrubbing, I'm organizing up and down the ladders. I'm fit. And I'm really looking forward to that next level and scaling my business and bringing my product to the marketplace. As you said, all those markets across the world, I'm in there, just can't deliver. That's the problem. So yeah, Pavlo and your team, Aurik, thank you very much. It's fantastic, and I'm so excited.
Please send my fondest love to Windhoek. You know, the thing that always fascinates me about Windhoek is that Lutheran architecture.
Yes.
It's such a beautiful town, a really, really beautiful town. And I've got very fond memories of it. So enjoy the trip there.
Thank you very much. I've got my daughter with me, so we're doing a bit of a father and daughter bonding session too, which is great.
Oh, that's awesome. That's awesome. Yeah. That's awesome. You know, it's interesting. It's interesting. I got challenged yesterday. I'm doing a series at the moment for Standard Bank called Mindset, Reset, Rebuild, Reignite. And it's a fairly significant series. And in the last episode, I had arguably probably South Africa's most experienced Kung Fu martial artist on the show, because there's a very special way to get control of your mind when you're feeling stressed. And when you're feeling stressed and you're going to make quick decisions, Philip, unless you can still your mind and be calm, you can't make good decisions. And there's nothing like learning how to get control of your body from a martial arts expert, because when you get punched in the face, you get very, very nervous in that instant, and yet you need to be calm. And so we did a demonstration in front of about 5,700 people, where he showed me how to be calm through a breathing exercise. And then I said, can I test it? He said, yes. And he hit me like this on the chest. And I did the breathing exercise, and I struck him back. And he collapsed over himself. And I've got that on record, that I took out South Africa's top martial artist. And yesterday we had lunch, and I thought he was going to blitzen me back. And he turned around and he said, how do you work with family when you are building and growing a business single-mindedly? And it made for a very interesting discussion, because I think, and this might be something worthwhile having a discussion, just a roundtable discussion about. I see two things, which is really, it's a pleasure, Mandla, thank you. I see two challenges with regard to finding balance with family and business. The first is we work with a lot of people who are first-generation wealth. It's not a color issue, by the way, it's not a race issue. It's across the board and globally. Globally. You know, those of us who weren't born with silver spoons in our mouth had to become business owners, and a lot of us have made success out of it. And yet a lot of those individuals turn around and say they're running 30, 60, 200 million rand a year businesses. They're saying, how do I get the same values instituted into my family? My kids see things differently from me, and I feel guilty about it because I spend so much time at work and I don't spend enough time with my family. And how do I find that balance? And you know, we never really talk about it, but it's something that you've got to integrate your family into your business, because there's not one business out there that is not a family business. Cheryl, I'm sure your family relies on your income. It relies on the success of your business. And Jasper, if you look at what we learn ourselves from building our businesses and through the many, many mistakes we make, imagine if we could share those and bring them into the lives and felt reality of our kids. I mean, you would be creating a remarkable human being. So I envy the opportunity you have at the moment with your daughter. It's amazing if you can merge the two together.
Yeah, thanks guys. Yeah.
Excellent.
Fantastic.
Good. If there's nothing
good
else,
to meet you,
folks,
Pavlo. Yeah.
And likewise.
Could I ask a question, please?
Please, Richard.
Pavlo, nice to be in the same Zoom as you again, with you. And we have completed 80% of your program since we started last year, and we're on 74% of our goals. And our financial year end in February 21 was the best year we've ever had. So there's got to be some good coming out of what's happening. And at the very least, we're learning a lot about not scraping the bottom of the ship, but getting up onto the bridge and clearly navigating. So that's the one thing. My question is that the funding from Aurik seems quite benevolent and logical. Buying back the shares, is that back to the guy that wants to take your dog and children away?
No. So the way that we value the business, in the beginning, where the investors come in, and sorry, it's not benevolent. So let me be very clear on that. It's not benevolent in the sense that because we are working together in Aurik Accelerator, the funding is assured by Aurik Capital. Aurik Capital is separately constituted, and it's 50% owned by a corporate investment house. They've got the funding skills and the M&A and investment finance capabilities that are needed to support a fund management process. So what they're looking for is they're looking for businesses we work with that have growth potential, that are implementing what we are giving them, and it's translating into performance and tangible, measurable results. And they want to fund that. And the reason they want to fund it, Richard, is to make a return. They want to put $1 million in, and they want to get $2 million out 5 years down the line, or whatever the case may be. And the way that the funding works is the way that you create your valuation. Let's say you value your business at 10 million Rand, and you take R1 million of funding, which means you're selling 10% of your shares. The same methodology that you use to value your business at 10 million Rand today is a methodology that would be used to value your business 5 years from now. So they come in and exit on the same basis in order to make it and keep it fair. But if you think about the trading
that
stock,
part is clear.
Yeah. So what a funder does, a funder, you sell spectrometry, products and services in spectrometry. So let's say you manufacture the spectrometer, you sell it to Jasper for 100 Rand, and it costs you 80 Rand. You make a 20 Rand margin on it. A funder says, my product is funding. I'm giving you 100 Rand, and I want to get back 120 Rand. So they make margin too, but their product is entirely, it's capital per se. So it's always a function of buyer beware. Whenever you raise funding from any instance, be it friends, family, and fools, be it banks, be it a funder, the benefit you have within the Aurik fold is I do sit on that board. And the promise that we've made the market is that the mandate is we will only work with Aurik clients because we have a relationship. We know the individuals we are working with. We know how they behave. We can see what's happening in the business. And the second thing is the way we go in is the way we go out. Excellent. Folks, I know we're running 30 minutes over time.